The repo rate has been cut by 25 basis points to 7.25%. The CRR and SLR remain unchanged at 4% and 21.5%. Announcing the second bi-monthly monetary policy this fiscal, the RBI governor said that the economy is showing mixed signs of recovery, but risks to inflation still remain. He called for astute food management to mitigate possible inflationary effects in the case of failure of monsoon. He also hinted at another possible problem of continuously firming crude prices amidst considerable volatility, coupled with geopolitical risks which might cloud the inflation forecast. So in today's edition of Public Forum, we discuss the key aspects of the RBI Monetary Policy Review. And my guests today are Mr. P. Vaidyanathan Iyer, National Affairs Editor with Indian Express, Dr. Kanhaiya Singh, who is a Senior Fellow with National Council of Applied Economic Research, the NCAER, and Mr. Shantanu Guhare, India Editor with Central European News. Welcome to the program. I'd like to start the discussion with you, Mr. Iyer. Is it very much on the expected lines what the RBI has done today in its monetary policy review?
I think very quickly, I think the rate cut was on expected lines. The quantum was also on expected lines. I don't think he really had the luxury to, go for a bigger cut. And immediately after the rate cut, we did see, the forecast for monsoon, which was, right, which clearly shows that, India is looking at a drought this year. So food prices are a big concern. So I think it was very much on expected lines. Had he known about monsoon, I think he would perhaps had rethought or had a rethink on this. But I think, to my mind, this seems to be the last rate cut in the next 6 months.
Right. Okay. So that's something which one will certainly have to see. Dr. Kanhaiya Singh, it's very important to look at the impact that the repo rate cut really brings in at different aspects. Your take on this?
I think the repo rate cut was on expected lines. We were expecting that it is a good time to cut rates because we have to boost investment. And I am of the opinion that this rate cut is still less, because what the RBI is thinking about, the policy statement that has been declared today, it talks all the time of supply side. It is saying you should control food prices, you should see the supplies. All the aspects that is discussed in more detail and expectations are from the supply side. There is nothing on the demand side. There is no discussion on demand side. And in that perspective, I really wonder what makes it to remain a kind of a tight monetary policy. We are saying that the credit offtake, the growth in credit is all-time low. It is going down and down. What is the reason? Why the investment is not taking place? How the food prices will come down? What is the role of monetary policy in bringing the food prices is not discussed. How the infrastructure will develop if the interest rate is high, capital cost is high, then how the wedge between WPI and the CPI will be narrowed. Why the RBI is not looking at the regions, the regions for a widening wedge between WPI and CPI? What is making it, becoming wider and wider? And look at, suppose the CPI target is 4%. Today, CPI is say 6%, and the WPI is -2%. The gap is almost 8%. If we are looking at something later in the CPI, are we expecting WPI to be -3%, -4%? If that is so, then if you think that WPI is a producer's price, then we should really seriously think what is happening to the production sector. Why it is not, is it not a kind of a indication of stagflation?
Yeah.
Something
I think
which RBI is not able to see?
That's a very critical question. We'll come to that, but first, Mr. Shantanu Guhare, did RBI have more room for introducing a higher cut than what it has? 25 basis points. Could it have really done more than what?
Well, I think discussions have always veered around the fact whether RBI's governor Raghuram Rajan is seen as a very bold person, wanted to do this. There are very few governors are kind of bold who can take on the FM. I think the pressure was more from the government side. So what exactly Raghuram Rajan has done is he has made this move against the expected 50 points. He's made it 25. I mean, he's basically showed that the economy needs support first, number one. He's raised three very, very crucial points. He said food management, as Vaidyanathan said. I mean, he's talked about the crude prices, and he's talked about monsoon. But he's also said that he has been able to handle monsoon pressures last year. That means we are presuming that despite signals of drought, he will be able to handle it. But where exactly the fear comes? The fear comes, in my opinion, that our exports are falling drastically.
That's right.
Number one. Number two, our manufacturing sector is certainly not doing well. It slowly started picking up. Raghuram Rajan has to address all of this, and he's also expecting the banks to further give it to its customers what the government has given it. It has not happened earlier, and I presume it will not happen again. So it is, of course, a very, very tough challenge for Raghuram Rajan. So, but given the capacity, given the limited options, he has done well. And of course, the markets are not satisfied. The Sensex has tanked, and the sentiments are very low. But given the current situation, I don't think Rajan could have done more than this. Though, and anyway, the previous Goldman Sachs and other brand managers were already saying that the cut would certainly not be more than 25%. So he has gone along the predicted lines. He's made the best out of a subdued inflation. That's all I can say. That's all he's done.
But you know, he's been very categorical about a lot of things. He says that the economy, it shows mixed signs. There are still inflationary risks that are there, and he has in fact pointed out those risks. And he does
said that. He said that. I'm going to cite a small example. He's talked about in transportation sector. He has said he's very happy the way Indians are traveling internationally and nationally. But at the same time, he's saying the arrival of international tourists is a problem, air freight is a problem, but railway freight is an advantage. So there is a mixed bag he is offering.
Right.
So, I mean, he has to see the positives and the negatives out of it, and hopefully he should be able to carry forward.
Okay, that is largely because of the fact that Mr. Iyer, do you see that, you know, when Mr. Rajan says that the services sector you kind of see mixed sort of response, something that Mr. Shantanu Gauri also pointed towards, and the fact that the economy also shows mixed signs. There seems to be investment, but the investment is weak. The production, the industrial production is not really that high. And of course, we need to pick up the demand, and it has not picked up to the extent expected.
See, I think the investment signals are very weak today. Very clearly, if you look at what has happened in the last 1 year, the number of stalled projects, if you look at the bulk of the stalled projects that we have today, a large number of them, almost like we have got CMI data which shows that about 132 of the stalled projects are just because there is no promoter interest. So if you link promoter interest directly to the interest rate, to the repo rate cut, so the businessman and industrialists will always over-exaggerate the impact interest rates would have on their own decisions to invest. Look at capacity utilization. Across sectors today, capacity utilization is very, very less. We are nowhere close to, in many of the core sectors, we are nowhere close to, the total capacities that industries have built up. Look at the flip side on, say, what is bothering Raghuram Rajan on inflation. Last 1 month we have suddenly seen crude oil prices firming up, 11% higher crude oil prices in just 1 month. Rupee has turned weaker, year on year rupee has depreciated 6%, and core inflation has also remained sticky at about 4.6% over the last 5-6 months. So I think the worries, and who is responsible for inflation today? And who is responsible for growth? So RBI cannot really take credit for growth. Credit is always taken by the government. RBI can't say that I have done amazingly well because India has grown. Of course, RBI's responsibility is to facilitate growth, look at data which is available with them, and do the right things. But politicians and the political class, I think that is world over, will take the credit for growth. But the blame for higher prices and inflation will fall squarely on RBI. So, I think given that, political economic scenario that we are living in today, I think the rate cut of 25 basis points was something which RBI thought that has to support growth, has to send a signal that it is pro-growth, and impending data, as and when data shows that inflation is, government is managing food prices better, it is taking anti-hoarding measures, or it is importing whenever stocks are required, food stocks are required. It has got good buffer stocks in wheat, rice, and sugar. So I think the government is well equipped to handle food management, so to say. It can manage food issues very well.
And what would you say about the points raised by Dr. Kanhaiya Singh? He says that the RBI could have done more than what it has.
I think so. Those are very, of course, like for me, if you ask me, growth is very critical today. For all of us, like it generates jobs. That is the biggest thing. It helps people go above the poverty line. It takes people out of poverty. That's what growth is all about. More than anything else. And a sharp cut in interest rates will give a great boost to the corporate sector, which will perhaps promoter interest will revive big time, and they will start investing on the ground. But then inflation is also a huge tax on the common man. Right. It's the biggest tax. People who are below, those who are not even paying 10% income tax today, they are the biggest sufferers of inflation. It takes away that much from their purchasing power. So I think you have to look at those interests also while we push growth. Okay, we will come on that growth aspect, because much has been in fact talked about those figures of growth too. Yep. But Dr. Kanhaiya Singh, looking at the risks that the RBI governor speaks about, which is monsoon delay, we know what state it's going to be now, and the crude prices, also the volatility in the external environment, something that he really points at. These are the factors, some of them, which he had hinted at today.
I again emphasize the same issue, that the RBI is doing it bit under a agreement, that as if they are the only the agency to control inflation. And but then why it talks about the supply side management with the government? And saying that government is not concerned about the inflation is not a political issue is certainly misplaced, because it is much more political issue than it is a management issue. Nobody, the electorate is not concerned that RBI is not doing its job. The electorate is certainly concerned about the government is not doing its job. So it is very much in the interest of the government to see that the inflation comes down. Now you see the structure of inflation. Now by raising the interest rate or keeping the interest rate high, are we going to reduce the consumption of onions or pulses or these things, which is actually pushing the inflation up? So if there is a change in the cropping pattern, if there is a kind of a problem in the storage, if there is problem in transport, now that is the way, that is where the higher interest rate acts against the public interest. Like the higher interest rate in fact can increase inflation in certain things, which is visible if you see the wedge between WPI and CPI. What makes inflation in the wholesale price index from minus 0.2.6% to 4% as 6% in CPI? What is it which is creating this wedge? What is the policy doing for this? Is it increasing the wedge or it is reducing the wedge? That has to be seen. And what is the response to the policy? So are we not, by keeping the interest rate high, we are constraining the development of infrastructure, we are constraining the development of storage facilities, we are also constraining, say, kind of the consumption pattern. Look, today the people are more credit oriented. Everybody is laden with debt. They are bringing the future consumption today. Right. And so the cost of living increases much more. Absolutely. With the increase of interest rate. Right. And that is what creates against the whole the dynamics has to be understood. If we are not able to understand this, we will land up with high interest rate, high inflation all the time. Which this cycle has to be broken.
But you know, every rate cut brings some sort of a hope that the home loans are going to be cheaper, the auto loans are going to be cheaper.
They don't happen.
You know, that's something which you know, which you see as a...
Because these cuts are very less. You see, today, what the government is trying to bring the financial inclusion, right? The bank accounts for the poor.
Right.
So, a lot of bank accounts are being opened. That is a cost on banking sector, certainly. Because managing, you know, a very big account in a small number is much more economical than managing a large number of accounts with the small deposits. So the cost on the banking sector is increasing. How they will be able to pass on these small bits of, you know, 0.25% or something to the consumers? I don't think this is going to happen.
I think since January till April, I think we have seen 3 rate cuts.
Nothing has happened on the ground.
That's right.
Fundamentally, what is happening? So that means what people are expecting much more. The banks are not able to do it. Say, if there is a cap, now our friend talked about there is a capacity utilization is low. That means still there is no demand. If that is not demand, the consumption is also, the people don't have money. They are paying their interest rate, they are paying the loans, not demanding.
Okay, we'll talk about this part too. Time for a very quick break in Public Forum. Please stay tuned for more.
नया फ्रिज बार बार खराब हो जाता है। दुकानदार और मैन्युफैक्चरर दोनों सुन ही नहीं रहे।
बिल्डर ने चीटिंग की, मेरे घर का सपना सपना ही रह गया। क्या करूं?
मेरे मैनेजमेंट इंस्टीट्यूट ने मेरे साथ फ्रॉड किया, करियर बनने से पहले ही बिगड़ गया। कहाँ जाऊं?
उपभोक्ता अदालत है ना? जी हाँ, जहाँ वकील की सेवा जरूरी नहीं, आप सादे कागज पर नाम मात्र फीस देकर अपनी शिकायत दर्ज करा सकते हैं। फैसला भी शीघ्र होता है।
जागो ग्राहक जागो।
कीजिए अब बैंकिंग जब हो आपकी मर्जी, कभी भी कहीं भी। अब पाइए सपनों की रफ्तार। कैनरा बैंक इंटरनेट बैंकिंग से बिल पेमेंट, टिकट बुकिंग और फंड ट्रांसफर मिनटों में।
कैनरा बैंक, टुगेदर वी कैन।
क्या बात है, पिक्चर पूरा ख्याल रखते हो। इन्हें दोनों टीके लगवा दिए हैं ना?
हाँ, 2 बालकनी देना भाई साहब।
हाँ, पहले साल 4 बार जाना, 4 बार 6 खतरनाक बीमारियों से अपने बच्चे को बचाने के लिए। पहले साल 4 बार टीकाकरण, शिशु का सुरक्षित जीवन। 4 बार टीके पहले साल, शिशु की यही है सुरक्षित देखभाल।
राष्ट्रीय टीकाकरण अभियान, रक्षा कार्ड और मुफ्त टीकों के लिए ANM या आंगनवाड़ी बहन जी से मिले।
ये है हमारी लाइब्रेरी, यहाँ हर किताब मिलेगी। अब तो हमारे यहाँ एडमिशन ले ही लो।
नहीं, मैं आपके कोचिंग सेंटर में एडमिशन नहीं लूंगा। जब आप किताबों पर पड़ी धूल को साफ नहीं कर सकते, तो हमारी अज्ञानता की धूल को कैसे साफ करेंगे? स्वच्छ भारत अभियान ने हम उपभोक्ताओं को देश को स्वच्छ बनाने की एक नई जिम्मेदारी दी है और हमें इसे निभाना है।
स्वच्छ भारत अभियान उपभोक्ताओं की सोच को दे एक नया आयाम।
जागो ग्राहक जागो।
जनता के सपने, सरकार के काम, करती है संसद सबका समाधान।
सबका साथ सबका विकास में मुझे आपका भी साथ चाहिए।
देखिए हमारी संसद और समझिए कैसे बनता है देश का विधान।
Welcome back. In Public Forum today, we are discussing the aspects of RBI Monetary Policy Review. And at this point of time, I'm also joined by Dr. Sudipta Mandal, who is the Emeritus Professor with NIPFB, National Institute of Public Finance and Policy. Welcome to the program, Dr. Mandal. Before you joined us, we were talking about the rate cut done by the RBI, the repo rate cut, and the fact that, you know, the panelists have expressed different point of views regarding that. And Dr. Kanhaiya Singh has, has specifically said that the RBI could have done more than what it has. Provided that several things really need to be brought down, the interest rate specifically, because most of the people in this country today are indebted in some or the other way, and this could have really relieved a lot of people. But did RBI really have the room, sir, here to go ahead?
Well, I think they took a good step in a very difficult balancing act. They always have to balance their primary objective of controlling inflation against the competing objective of growth, and at this point of time it has tipped in favor of supporting growth rather than inflation. It was already quite low. They've already achieved their 2016 target, but there are downside risks. I mean, oil prices are beginning to look up. We don't know about the monsoon prospects. So there is a possibility that inflation will pick up, but they've taken a call that it's more important now to push growth rather than worry about inflation. I think that's the step they've taken.
And Mr. Rajan has specifically also talked about the growth, plus the fact that there are other signs which really give you a very mixed picture of the economy.
Right.
And that's something which one will certainly have to read between all the aspects that he has touched upon today.
Right. So they've taken a call in a complicated situation, put it that way.
Okay, but Mr. Shantanu Guhare, let's take it up one by one. Specifically, since we talked about the exports, it's very interesting that Mr. Rajan says that the exports have been certainly weak. There are other areas which have to be looked at, but let's also look at the domestic demand side, which certainly has to be, that demand has to increase in order to bring things back on track.
I think Mr. Rajan is hoping against hope.
Yeah.
He's already called it unclogging of stalled investment projects. And he has admitted the fact that there is absolutely low promoter interest in a large section of sectors of businesses where people are just not going in. He also admits the fact that consumption patterns of this country, primarily in the rural zone where scooters or two-wheelers, their purchase is not happening, which means there is a problem there. On the flip side of it, he admits the fact that coal production has gone up. That means he's triggering some growth in electricity generation and places like basically mining and stuff like that. So he's trying to balance one against another. But the fact that manufacturing sector is facing a severe crisis, our imports are low, the exports are very, very low. It is indeed a matter of concern, and it's been continuing for months after months. So he has to address that.
But what are the basic reasons of the exports being that low?
In fact, the international markets are drying up to Indian products. They're actually drying up to Indian products, and obviously this is a slack season. So Indian products have not been able to make that kind of an impact. I was tracking a few of the markets. For example, let's say diamonds. We have been a global leader along with China, but we have virtually come down a number of notches in the last 5-6 months. The demand has not picked up. Various government policies have been detrimental to the growth of people who are into the business. So exports is the biggest concern of the government. Manufacturing sector is the biggest concern of the government, and its consumption patterns. Rajan also expects the banks to behave the way the banks would. But Dr. Kanhaiya said a very interesting thing: the banks would never go to pass on those interest rates down to the consumer. So despite those repeated cuts, the consumer down the line has not benefited. Still, Rajan says, he made that point in the press conference, that he expects the banks to fall in line. I really do not know what exactly
he also
that
said
means.
That banks have started passing through the past rate cuts, something that he had said.
I really doubt that.
So
I don't think so.
9 banks have done that.
9 banks.
They've
started. Let's see. So I think those are a mixed bag of his problems, in which he sees a few sparkles of hope.
A lot of word there on the bank's part, because you said that the banks have been sitting on the asset quality issues. We are talking to banks on dealing with it, and the message to banks is deal with them as quickly as you can. Those are concerns that he has expressed, and those concerns are legitimate.
Those concerns are legitimate. You know, the asset quality of banks has deteriorated over the last 2-3 years, largely also because, you know, so much of stuck investment of, you know, various infrastructure related projects or capital intensive projects. So they are sitting on huge NPAs. That's one reason they are so reluctant to cut rates as well, right? So their net interest margins are low, so they don't want to cut rates and, you know, further impair their own profit and loss accounts. Having said that, I think, you know, banks, we need to recapitalize banks. You know, that's one aspect of it, which, you know, the governor did talk about, periodic infusion of capital into banks. And also, I think in the larger scheme, while, you know, we are laboring over interest rate cuts, and today's action of a mere 25 basis point cut, I think the larger aspect to my mind to really push growth beyond these interest rates is dramatic and bold reform measures, and also a significant step up in public expenditure, which we haven't seen happening because of, you know, many reasons, could be many reasons, best explained by, you know, say lack of capacity of states to execute big projects, for instance. Or even, you know, the ruling government's own political stance on, say, FDI and multi-brand retail. So I think, you know, there is clarity needed to give a push or stimulus to the reform process that we are, that, you know, India is undertaking, which also sends very positive signals besides just the interest rate cut. You know, I think those are issues which, besides the policy response from the monetary side, I think those issues also need to be, you know, looked at.
You know, something which, Dr. Mandal, the figures really speak a lot, but at times they also confuse you a lot. Here we are with the Indian economy figures that grew at 7.3% in the 2014 and 15 fiscal. We are expecting that our economy is going to overtake that of China's in 2016. But at the same time, you see other confusing signals, like the IIP figures are not very encouraging, the exports are weak, we are still crying for more demand in the market, which we don't really seem to be watching. Manufacturing needs the push. What does it really say, sir? If you can please enlighten us more on that.
Yeah, actually a lot of confusion has been caused by these new GDP figures.
Right.
Now, the fact is that the new GDP figures are based on a much more robust data set, you know, from the Department of Company Affairs and so on, than the earlier figures, which were a lot of, you know, guesswork and so forth. And now you're looking at a growth rate of 7.3%, likely to go up, but you don't know what was the growth rate on the base of these numbers earlier. Maybe it was even more, because all the collateral signals were in that year, you know, when we actually had a balance of payments crisis, that growth came down. But we don't know what was the growth before that. So what did it come down from? So we should leave that aside, and a lot of people have done. They said, let's look at other indicators.
Right.
And those indicators, as he said, for manufacturing in particular, has looked very gloomy. But the good news is today's data, you know, this PMI is actually quite interesting. And that shows that this month, the May numbers are looking much better than April. And April was worse than March. So we are back to where we were in terms of PMI indices roughly around March. So that's a positive signal. So growth this year may be higher than last year. I mean, that is a comparable thing. We can compare this year what we will have with last year's numbers. But I think it is pretty clear that the investment cycle has not yet turned around, and therefore growth in a serious sense has not yet turned around, and that is obviously what dominated the market's concerns. And as we have seen, that is also the thinking behind the RBI.
And why do you think that has happened? Because, you know, you see a lot and you hear a lot from the government side that we are coming with the new policy, and this government certainly also says that we are going to have more reforms, especially the ones that have been stalled for this long. We are going to just push them forth.
Yeah, actually, and I went through this fairly carefully for a piece that came out a couple of days ago in the Financial Express. they have done a lot. If you leave aside, all the hype and all these fancy slogans and so on, this government very good at producing good slogans, and you go item by item of what they've actually done in 1 year, it is quite a lot in terms of what you would expect. You don't expect results in the first year, but you do expect, has this government thought through it? Do they have an approach? Do they have a roadmap of where they want to go in the next 3-4 years? And some action. And that has actually happened. If you look item by item, not all of it of only their making. I mean, the Coal Act, the new Act on coal was triggered by the Supreme Court. But whatever it is, they did get that act through. And a number of items like that. If we have time, we're going to detail. But really, it is not an unimpressive record of what a new government on a new learning curve. With many of these ministers for the first time in Parliament, let alone as ministers, they're working very hard to, really learn on the job. A lot of things have been
linked, and whether it's to do with coal, it's to do with other resources, or you've seen a lot of movement on spectrum.
On a number of things, they are certainly moving in the right direction. They haven't made a lot of progress, but you don't expect it. They just use up 20% of their time.
Yeah, but Dr. Singh, where is this? How to address this question of the demand question? Something that has been talked about for months now, that we need to really raise the demand. The domestic demand has to improve. What is the key to improving that demand?
See, the major policy stance any government does take for increasing demand is rate cut. Now, that is not happening. That is not happening the way it should happen. My worry is again, it goes back to the same thing. Suppose X factor, the oil prices would not have come down, right? That is external thing that has happened. Then what was the situation with the high interest rate and the CPI inflation? The CPI inflation has not significantly responded to higher interest rate. It is not statistically proven, it is not robust relationship. If today I ask a simple question to the RBI or anybody who does it, that by increasing 1% interest rate, how much inflation will come down, or for reducing 1% in inflation in CPI, how much interest rate you will have to increase, there is no answer. There is no answer for this. So what we are actually saying, oil price has come down, so inflation has come down, so let us bring down interest rate. That is a good situation to bring down interest rate. This is the best time that the economy can move to low interest rate and low inflation zone. Why suddenly we have stopped looking at WPI? Why suddenly we have stopped looking at the gap between WPI and CPI? There is no answer. There is no discussion in the monetary policy documents. Why it is happening? Why people are not looking at the WPI? So long we have been looking at the WPI. That is negative zone now, minus 2.5%. Suddenly we have become wiser because everywhere in the world CPI has been used. Okay, you take CPI. But then everywhere in the world are the developed countries where we are actually trying to follow, where the financial sector is very well developed and the policy signals, they move very fast. The gap between the producer price and the consumer price is not this much as we have. We have a gap of 8%. Does it happen anywhere in the world, in the well-developed financial market countries, where the gap between the consumer price and the producer price is this much? Why it is happening? Why people are not looking at this?
And there are constraints at different levels which then will have to be addressed.
So my worry is that by increasing or keeping the interest rate high, we are increasing this gap. Because we are not allowing the infrastructure to take place, we are not allowing the investment to take place, we are not allowing to cost reducing measures.
Would you like to please add something here? Because if it is so simple and if it is so clear, then why aren't we doing something about it?
No, I think what he mentioned earlier, I am inclined to agree with. In fact, there has been a lot of discussion the documents that RBI puts out are very motherhood. This is also there, that is also there, but in fact a lot of debate takes place, has taken place around cost push versus demand pull inflation. A lot of people, including myself, have made the case that a lot of this inflation, part of it is even imported, because when oil prices were high, and interest rates are not very effective as instruments for controlling this, because it purely affects demand. But that being said, on some of the other issues, I think it's a little more complicated. First of all, you don't have any producer price index as yet.
Suppose
we have a wholesale price index, a consumer price index, and there's a demand to have. In fact, RBI is the one that's made a main demand to have a producer price index. The CSO is addressing this question, and hopefully a year or two down the road we will have. Now, a large part of the difference between inflation rate in WPI, which is actually negative, as he mentioned, and the CPI, is accounted for by the difference in the weight of the food group, which is very large in CPI, and it's relatively small in the wholesale producers, because manufacturing and other things come in, which is not there as part of the CPI. Similarly, on the other hand, certain things which are there in the consumer price index, like house rent, this, that, and the other, play a very small role in WPI. So these have been analyzed very carefully, and why there are these differences, there are lots of technical papers that explain this, but it's not out there in the public domain, so not everybody knows about it.
But we will continue to have it for until the time we really bridge the gap.
I think there will be a difference always between the CPI and then the WPI and eventually the producer price, because of differences in the weighting schemes and the different rates at which the different components inflate. But I just want to add one more thing, that to revive the investment cycle, the interest rate is just one factor. There are so many other considerations. Before an industrialist puts his money into a new project, he has to think of so many other things, not just a 0.5% or 0.25% change in the interest rate. And certainly a lot of it has to do with the the bottlenecks in the administrative processing system, which is still work in progress to clean it up.
Okay, fine. On that note, we'll take a very quick break in Public Forum. Please stay tuned for more on the other side of this break.
चिंतित क्यों है महाराज?
पृथ्वी पर लोग अपने ही हाथों से मृत्यु खरीद और बेच रहे हैं। तंबाकू का सेवन कर असमय मृत्यु प्राप्त कर रहे हैं।
क्या मूर्ख दुकानदारों को ये नहीं पता कि शैक्षणिक संस्थानों के 100 मीटर के दायरे में आप तंबाकू का पदार्थ नहीं बेच सकते?
18 वर्ष से कम उम्र के व्यक्ति को तंबाकू पदार्थ बेचना कानूनन अपराध है।
ऐसा करने से आपको 2 साल की सजा और जुर्माना हो सकता है। जागो ग्राहक जागो।
तैयार तो हूँ मैं माँ बनने के लिए, और फिर से तुम्हारी दुल्हन बनने के लिए भी।
प्रसव पश्चात IUCD यानी PPIUCD डिलीवरी के तुरंत बाद अपनाने से आप बच्चों के बीच 3 साल का अंतर रख सकते हैं। सुरक्षित और भरोसेमंद। इससे आपको मिले बच्चे और पति को प्यार करने की पूरी आजादी।
प्रसव पश्चात IUCD अपनाओ और दोनों रिश्ते निभाओ।
जिंदगी में कुछ बनना चाहते हैं, उच्च शिक्षा की आकांक्षा करते हैं, अर्थ की कमी ना रोक पाएगा आपका रास्ता। कैनरा बैंक एजुकेशन लोन।
कैनरा बैंक, टुगेदर वी कैन।
हम आज अपनी मौत का सामान ले चले।
अरे कोई पागल ही होगा जो मौत का सामान लेके जाएगा।
सभी पागल हैं। ये सब जो आप खा रहे हो, ये मौत का सामान ही तो है।
मौत का सामान? जी हाँ,
मुंह, गले, जीभ और गाल फेफड़े का कैंसर तंबाकू, गुटखा, खैनी, बीड़ी, सिगरेट और पान खाने से होता है। याद रखें, तंबाकू युक्त पदार्थों का सेवन ना करें, ये जानलेवा हो सकता है।
Welcome back. In Public Forum today, we are discussing the key aspects of the RBI's monetary policy review. Okay, in reading from what the RBI governor also said, he says that the strong food policy, I'll come back to you, Mr. Shantanu Gore, strong food policy and management will be important to help keep the inflation and inflationary expectations contained over the near term. Now, something which he has, which we have in fact talked about too. But since monsoon is one of the important factors here, the delay in monsoons, though he has said that there is moderate impact of the unseasonal rains, but we all know how much dependent we are on the monsoon and how it will have some impact on the food supply and the food management aspect too.
I think we have enough stocks, so that should not worry us. But food management has always been a problem in this country, and also the food cycles.
Yeah.
Rajan is presuming that since he was able to handle the pressure last year in a near similar kind of situation, the government would be able to handle the situation now. But it is increasingly becoming difficult because the current spell of drought, signs of which are already there, and the record number of deaths that has happened, it is all coming back to have a cumulative effect on the economy. Added to this is, as we earlier discussed, the lack of growth, the lack of consumption, the lack of production in this country. India hasn't really picked up the big orders. Big Indian projects haven't really gone into a system where they could acquire land and do it, because the land acquisition policy is still under a huge churning, because there are conflicting signals coming out of the government that who can actually acquire land and what kind of, who will actually be able to acquire land to do what. And the government has made it very clear the corporates won't be given land which was once owned by the farmers or whatever. So I don't see any growth happening, and that is indeed a matter of concern for me.
Because land in itself is a very emotive issue too in this country.
The previous government also had various issues about the land. I mean, this government had come out with a policy, and I think from a layman's point of view, rather calling it a land acquisition policy, if it was called the land development bill or something, a generic message would have gone out. But conflicting signals have come out on who would be able to acquire the land and for what purpose it could use, and there are some serious lacuna that exists in subsection 1 and subsection 2 of the Land Act, which actually defines rules of which companies can get, and whether for example in defense there is a new rule on the government can acquire the land and the private sector can actually go in and make it. That means effectively the private sector goes and gets that land. So I think these kind of things have to be very clear. And anyway, new projects are not happening in this country, which is a major concern. India hasn't really picked up big orders for Make in India. That is another big concern.
But there is one thing which has been talked about a lot, and that is the FDI. We've been saying that, the FDI figures have really, shot up, and thanks to the Make in India project, it is probably inviting a lot of investment, foreign direct investment in the country. What does it really say? Should we be very impressed with these figures, or should we just say that even now there are things which have to be addressed? So it's not just the percentage which counts. It's at the end of the day, it's the sentiment that counts the most. Whether really an investor, a foreign investor or a domestic investor is really keen to invest in India.
Yeah, I think in this, two issues which can change sentiments quite dramatically are things which we have discussed and debated quite a lot. One is of course FDI and multi-brand retail. I think because it does a lot of good to the back end of entire retail chain and agri products, warehousing, all of that. The second is of course the minimum alternate tax that for which several notices were sent to foreign institutional investors, which spooked them. I think these two issues, if they are addressed quickly without cutting losses, I think they change the sentiment significantly. Coming back to the food thing, I think one issue which I think in food, while grains are fine, we have got good buffer stocks in grains, the critical issue is fruits and vegetables. When monsoon doesn't happen, when we face drought, the biggest casualty is where prices go up, because of lack of storage capacity, again linked to FDI to my mind, is fruits and vegetables, because they don't really have a long shelf life. So they cause a spike in prices, and that's where the common man is affected, and that's where political backlash also happens. So I think in terms of sentiment, FDI and FII, those small, very focused issues need to be addressed. And I guess food again is a larger, to my mind, FDI and multi-brand retail problem. Yeah.
But you see, when one starts looking at these issues, whether it's to do with sectoral problems, for instance agriculture, or for that matter manufacturing, what is it that we have seen in the last 1 year which really tells you that we are rather heading in a in the right direction? There is a change of leadership. You see a lot of things being said about both these sectors, reviving them. Do you see a lot of
the biggest thing that has happened in the last 1 year, to my mind, really the biggest thing, is the narrative about India has changed globally. I think for after almost say 5 years of the previous government, India was almost seen as non-friendly, not really an investment destination. So that has changed. I think there is a lot of vigor and dynamism in our own economic policy or reform on the reform front, on the foreign policy front, and several measures have been taken in the last 2 budgets. One was of course an interim budget, and then the full budget. Be it say subsidies. I think there are huge savings which people not really have talked about as much as they need to be talked about. About linking of say LPG subsidies to your Aadhaar card, and making it a direct benefit transfer straight into your bank account, which plugs leakages. I think there's a huge saving there. Again,
and also expanding the banking network.
Absolutely, expanding the banking network, making it available for people who have not been part of the banking system, formal system. Second, of course, is on subsidy on urea also. I think fertilizer, which we haven't really talked about as much as the government seems to have done. Almost 11% savings there. I think these 2 issues are critical to my mind, and they have happened in this government. And of course, there's a lot of movement on, say, ease of doing business. See, at the end of the day, it's about state governments, not so much about the central government. Central government can do whatever is within its realm to ease, processes, say, document. Say, for instance, somebody was telling me, a very good IS friend of mine who's a doctor in West Bengal, he has set up a hospital network of hospitals across the country. He said there's 72 licenses which you are required to have in West Bengal to set up a hospital. And these licenses cannot be applied for concurrently. So you apply for one, then you apply for the second, then you apply for the third. So by the time you set up a hospital, it takes a long time. So I think ease of doing business is largely in the realm of states also.
Right.
So
and
they
simplifying
really
the procedures. Simplifying the procedures.
Simplify
that's the most critical thing. Okay, Dr. Mandal, since we talked about the manufacturing part, there is a lot of emphasis on skill development, but we still need to really see whether we are able to really do that to the sector. Plus the fact that, much push to the Make in India. Is it really going to, generate the level of manufacturing that we need in our country? Or what do you think are the areas which really need to be addressed now in the upcoming years to ensure that, this demand scenario can be improved, the investment scenario can be improved, the domestic, at least there should be some sort of a positive sentiment within the domestic investors.
Yeah, I think a few things they've done in terms of easing FDI, which you were just talking about earlier. 100% investment FDI in railways, 49% in defense for the first time, in a number of other sectors and so on. These are very substantial opening of doors. But that doesn't mean that all this is already translated into huge inflows of FDI. I mean, you just open the door, it will take a while before these guys actually have projects in place on which they will put money. But that being said, I think a big problem here is that we are not really cost competitive. In other words, our productivity is not competitive with a lot of others trying to compete in the same space. Certainly China, but not only China. There's also Vietnam. In textiles, we are way behind Bangladesh, a number of others. So we have a lot of catching up to do. And skill development is, again, I mean, I'm glad they have this program and so on, but ultimately it has to be the industries which have to develop those skills. So they have to be very much part of this game. It's not going to happen
And land
overnight.
acquisition is going to be one of the crucial factors.
Absolutely. So we have to really invest in in a workforce that is very productive, which means they also have to be decently educated in the kind of world, that high technology world that we are moving into.
And how do you look at the role the states can play? Though much has been said about it, and much of the responsibilities are now being shared and I would say have been transferred to the states. How would that help the government achieve all these targets?
No, I completely agree with him there that a lot, you see, in a sense the central government can only do exhortation and give messages and try and play an enabling role. But the end of the day it is the states, because manufacturing has to happen in a plant located in some state somewhere, and
right.
He talked about hospitals, but it's there in the n number of clearances and so on. But I think the good thing here is that this is where you will separate the wheat from the chaff. I mean, the states that are going to perform and are performing will move ahead. Already we know there's some states that are racing ahead, others unfortunately getting left behind, mostly in eastern part of this country. But that's going to happen. And if states in the east don't get their act together, they will be left behind. It's a pity, but that's how it's turning out today. And so their young girls and boys are all going and looking for jobs in other states.
Dr. Kanhaiya Singh, you see, Dr. Kanhaiya Singh, if I ask you, there are several things which have to be looked at when we address or when we try to, interpret the challenges that the economy faces, and all of them have to be clubbed together to see that we really achieve what we desire to as a developing country. This very obvious comparison with China is all right, but are there lessons that we should need to learn from other countries?
Yes, certainly. You see, 2-3 things are very important for this thing. One is signaling effect. Lot of things can happen if you have right signals, and those signals, they come from the way you do your policy making and the way our politicians behave. You see, that is very important. For example, I'll tell you this land acquisition itself. China has commented on this, and they have commented on this with a eye on the investors, that look, India cannot do it, but we can do it. And our politicians have made it a very populist kind of a issue. The land has to be acquired. For anything, land has to be acquired. And the law for acquiring the land has to be transparent and easy and a time-bound manner. That has to happen. Now, if we are not able to pass this land bill in the current form or with little modifications, we will be sending a very bad signal to the investors. Look, things are still the same, because we believe in populism. How much people are affected, how it is going to affect, we don't look at the real economy, how the economics will work, but we generate kind of a hype to get political advantage. Now that situation, that gives a very wrong signal. Similarly, the transparency, one thing that is happening good today, we are getting the feedback from the corporate sector also, that now it is not necessary that somebody in the government to get your job done.
That's right.
Now that culture is almost gone.
Yeah, and also
people are striving to meet, but they are not able to meet.
Yeah, and the target that the red tapeism should be removed.
Yeah. So that is giving a right signal, but this land bill is giving a very bad, wrong signal. Doing business is being made easy at the central level, and hopefully if the states also follow the same process of digitizing the process of getting registered or getting other permissions, and it is time bound. If the states also follow, and hopefully, because the states are competitive, now they have to compete with each other. So there is a cooperative federalism, but there has to be a competitive federalism also. Now if that happens, then the states will also follow, like we can see the right things, like UP government advertising that we are we are going ahead with the digitization, we have done this. So the states are taking pride in digitizing.
That's right.
Now that is a good sign. That is giving a right signal. You see. So
and the fact that, you know, globally we are also seen as a very potential market
if the government is also able to give this signal that we are very alive to the new technological requirements in terms of skill and infrastructure. Now see, the high technology oriented defense manufacturing is not going to come unless until that signal is there.
Right. Okay. Okay, fine, fine. I'll take comments from you now, Mr. Shantanu.
I think at one point we all have to understand that the global orders are not coming. We have made a pitch, and all this story about sending the right signal or the wrong signal, we have heard it for 10 years now. In 1 year, as I agree with Mr. Mandal and even all the panelists, Vaidyanathan said the right thing, that the signals have gone out right. The last 1 year the government hasn't gone into any scandal. That has also not happened. Which means that yes, this government means business, which is a very positive sign as compared to a government which was, there were scams after scams after scams. But we haven't got the orders as yet. Even countries where we have gone and done some big pitches, those orders also have not come. We have talked of skill development, but skill development is just a beginning process. The ministry has just been formed, and various schools and colleges, the people are actually being encouraged to try and take a skill development course along with the main course. Whether they pick up that or not is a subject of debate. Hopefully they will pick it up, because it always enhances your capacity and your ability to try and get a job very quickly. Hopefully the first right signal, in my opinion, the government has sent was the coal auction, where they could pick up a huge chunk of money. A significant portion of that went to the states from where the coal mines are. Signals like these need to be sent more in the coming years. Otherwise we will have a problem on hand. Otherwise people will realize that despite multiple plans and all kind of things, we are still not going ahead. We are still debating it, and that's not going to help at all.
Okay, fine. So change shall happen, but first of all, we must see really the signs, and it's very important to read the signs, and the government must continue to give away those signals. On that note, we'll have to conclude this discussion. Thank you very much, gentlemen, for joining us here.